Smart. Okay, the record button has officially been hit. We're going to go ahead and get started. Thanks for joining us here on Rethinking Everything, winning the battle on the ground with non-QM with Angel Oak. Before we get started, just a couple of housekeeping items. Number one, stick around to the end because we have a survey for you, and there's a little special something for you if you do the survey. There always is. Okay. So stick around to the end. Make sure you do our survey. We're just curious to know, what we can do going forward to bring more value to you guys, even more than we already bring, which is pretty tough to do, I think, but it might be possible. So we'll get your input on that. The other thing I wanted to bring up is, of course, as we go through this, you're going to have questions. On your computer screen, there's a little GoToWebinar icon of some sort that you click, and there's a spot where you can drop questions in. And so we would just ask you as we go along, drop your questions in as we go. When we get to the end of the webinar there, we will do our best to field all those questions. And if we don't get to yours, don't panic, because someone over at Angel Oak will field that question for you directly, give you a call and answer your question. So not a problem there. The other thing is that we often get asked, is this being recorded? Yes, it is being recorded. But I will tell you this, please try to pay attention, take your notes, because GoToWebinar has definitely improved their recording platform. It's definitely a lot more stable than it's been in the past. From time to time, the recording will not work, and there might not be audio, or it just doesn't work, or crashes, or whatever the case may be. So yes, we are recording it. The intent, of course, is after the webinar, you will get a copy of this as well. So, we understand, both Tom and I get it, as loan slingers, that once in a while a nuclear bomb falls out of the sky into your lap in the mortgage business, and you simply have to put it out. So with that, if that happens,
or a fire alarm goes off, or any
and you have to walk away, then yeah. So we're recording it, and so but we do encourage you to stick around, pay close attention, and ask your questions. This is going to be a great webinar. We've been doing this one for a while, and it's been awesome. So with that, I think I will turn the reins over to Tom Hutchins and have you take it away, Tom.
Yeah. Okay. Great. Well, thanks, Frank, and I agree. This is a really great series, and it really is timeless. I think everybody, as the market continues to transition, you should always be rethinking everything. So I know that's what you and Brian talk about a lot, is just, hey, reinvent yourself, because the market requires that. If you do the same old thing and expect different results, that is certainly the definition of insanity. So anyway, I'll just a quick outline here, but we're going to talk about non-QM and how it can kind of meet a residual income, talk about follow-up strategies, how to use non-QM to grow your pipeline, and then wrap it up with some scenarios, so you as an originator can kind of relate to some deals that maybe you've had come across your desk, and now maybe there's a home for them with Angel Oak, and going to show you some resources, some tools and resources that we have online that can really help everybody out. So that's it for today. You know the drill, Frank. Keep me in line if I get off talking, but let's really
no problem.
Kind of an exit strategy, but really more importantly, residual income, because I talk to originators all the time, and look at other industries, and a lot of people talk about, gosh, I wish this was like kind of the insurance business. You build your book of business, and then over time it just continues to pay you this residual income. But in the mortgage business, this is what it looks like. You close loans, and then we know on the first of the next month you're back to zero. So this is where non-QM and having an exit strategy can really help. So we're going to call it portfolio products, just to differentiate it from agency and government loans. But you close one of those loans, you set a calendar reminder for X period in the future, and then you contact that borrower 1-2 years down the road, and you're building your pipeline for future loans. So it's residual income. Like you do still have to do some work to do it, but we've been around for 5 years now, Frank, and we've seen originators, like in 2018, had 2 or 3 loans every single month that were non-QM loans they had done with us a couple years prior. So how many of us would just love to have that? It's just and there's nothing like the present. So now is the time to pay attention. Obviously you're interested because you're on this webinar, and thanks very much for that. But because of that, I really believe you can start building this pipeline of residual income by originating the non-QM loans. Does that make sense, Frank?
Totally. Yeah, it does. And how nice will it be, like, if you're focused on getting just a couple of non-QM deals a month, right? And we're going to show you guys where to find it, how to get them. It's not going to be that big of a deal, right? But you get a couple non-QMs a month, and you're literally like adding to your pipeline a couple of years from now. Every month you do it, you're literally adding to your pipeline a couple of years from now, because in most cases, and we know, Tom, not in every case, but in most cases, right, you're going to be able to refinance those guys into a different deal. Right?
Yeah.
You've got like 2 years now. All of a sudden, it's like, oh yeah, great. There's my reminder. I got to take care of that guy. Oh, I got to take care of that guy. Everybody could use a couple of deals a month, right? Everybody, right?
Yep.
So you're building your own nest egg.
Yeah, I was just to say, we had one loan officer. I think we might have even had him as a guest on here. But in 2018, his business was up 30% from the year prior, and 100% attest that growth to the non-QM, both new loans and the residual piece, the refinances of prior non-QM loans. So it's pretty exciting stuff to me. I mean, everybody would like to grow their business 30% year over year, and this is how you can do it. So best practices: know your exit strategy. You have to end game. When you start talking to a borrower and you see they're not going to fit into this agency or govy loan, and start thinking about, okay, what's the situation here? Really the exit strategy needs to be part of the initial conversation with the borrower, because when you take them away from an agency loan, now the difference between agency and non-agency, or agency and non-QM today, is a lot leaner than it used to be. This was a lot more important to know the exit strategy, first and foremost, just to get the borrower to accept this non-QM loan. But it's really just, it helps with the conversation with the borrower that, hey, Joe borrower, you don't fit the loan today, and here's why, but in 18 months and 2 years, you're going to fit the agency box. So, we can stay in touch and stay in contact. So knowing that exit strategy right out of the gate, to me, is probably the most critical piece. So, helps you sell the loan on the front end.
Yeah. So I've put up a poll for everybody here, Tom.
Okay.
Just as you were winding up that conversation.
Okay. Good.
Just asking everybody, do you have a calendar reminder set up for contacting a borrower a year in advance of their upcoming refi? So this is a great question to ask, and this is something that, if you got the time here, guys, go ahead and click on your response, and it's going like crazy right now. Everybody's putting in what they think here, but as it stands right now, it looks like it's pretty close, almost 50-50, Tom. It's 52 say yes, that they're very proactive about doing that, and now it's 54 say yes, and 46 say no, but they think that it's a good idea. So pretty interesting.
Well, and that's awesome. I mean, if half of the group is doing it, when it's non-QM, I think it's even more important that, if you're closing somebody on an agency loan, knowing an exit, their exit strategy is they may not ever be in a position to do a refinance, but on a non-QM loan, there's just that higher probability of it. So knowing that, and then we talk about here, setting calendar reminders. I always think that things like this take a really high-tech CRM to, where you've got to do all this thing, but it's so basic. Just go into Outlook or Gmail or whatever, go into your calendar, and just put a reminder with that borrower and set it up front, instead of trying to remember in the future, oh yes, I need to touch base with this person. Let your calendar be your friend, and let the calendar remind you when you need to start making contact with that person about a refinance.
Yeah, if you do it as a reminder, like in Google, it'll pop up, right? It's going to pop up and say do this. And I would recommend that when you do these reminders, guys, put like $2 signs. Start off the pop-up reminder with $2 signs. Okay, then call whoever about doing that refi. Just so when you see that pop up and you see those dollar signs, oh, that's right, there's money in this one. That's how I do it.
Get your own attention.
Yeah, get your own, exactly. Because, you know, a lot of times things are popping up, and it's even if it's our own stuff, oh, I get to that or I get to that. But if you see dollar signs pop up, go, wait a minute, wait a second. I'm going to pay attention to this pop up here. I'm going to make sure I do
Yeah.
this.
Hopefully that'll help you prioritize, right?
Yeah,
Put it at the top of your reminder list when it has dollars.
exactly.
I like it. So anyway, just here's just some other examples, the 45 days prior to and things like that. So you can really just, again, it's just putting the strategy together at the time of the initial origination. If you do that, include the calendar reminders, then you're good to go.
Yeah, I just, it's just so important that you bring that point up, Tom. And it's, you know, think about it, guys. When you're sitting with the client, you're gonna get them into this deal that it's you were the only one that could help them get into the deal. It's part of that process is we're gonna talk about this. You know, we're gonna come back and look at this again in a year or 2 years or whatever the case may be. So you're setting it up now. So as we go along and do our follow-ups, they're waiting for you. They're actually part of the process at this point going, yeah, I'm waiting for Frank to give me a call back so I can get this changed, you know.
Yep,
so,
no doubt.
Stuff.
But then if you don't and you have some poor habits, I think you said it was a 50-50, you know, the 50 that's not doing it, that's something that you really need to work hard on to make sure that's not your habit. Make your habit to be the proactive one, so that, you know, borrowers are kind of inundated with marketing and even what we do in our daily lives. So you can actually lose that borrower to someone else just because you have not been proactive and you have not put these reminders on your calendar to touch base on a regular basis. So that's just something that you don't want to do. I mean, whether here's an example, we heard about somebody lost a deal because they hadn't been good at following up, and the borrower holiday party got talking to somebody and said, hey, I either I'm a loan originator or I have a good friend that is, and they can help you, and reach out to this person, and then all of a sudden you're not part of the next transaction.
Yeah.
So it's good.
That's the truth. Yeah. So what we have to do is we have to really rethink everything, like we were talking about, Tom. You know, and you know, we've been using this little mantra, rethink everything, on the show and here with this webinar, guys, because it's the truth. And what we really want to do is do our darndest to keep our customers on the battlefield that we can win on. And specifically what I'm talking about is there's so many mortgage, you know, apps and widgets and gizmos and, you know, e-companies and, you know, that are out there in the cloud, man. And the truth is we're in a way better position to get these deals the second time around. And even the first time around, we're going to go over that with you guys, if we stick to the battleground that we can win on, which is on the ground. And what I mean by on the ground is having real genuine engagement with our consumers again, you know, and our referral partners. And what I mean by real genuine engagement is it doesn't have an E in front of it, right? I mean, well, engagement does, but the little E, you know, doesn't
but
have
it's
the
not
little,
E engagement.
Yeah, it's not E engagement. Good one. Right. Yeah, right. It's real engagement. It's, you know, face to face. It's eyeball to eyeball. It's mouth to ear on the phone. And that's where we're going to win the battle. It's just like Tom said, you know, if we're not on a pretty regular basis having conversations with people, there's an opportunity for them to get stolen away from us. We don't want that to happen. And we can win. All we got to do is be good about old school stuff. It seems to me like a lot of technology that's come out over the past, you know, 8-10 years, Tom, is designed to remove the loan officer from the process. Even loan officers are signing up for it, saying, yes, I want to make my life simpler. I get that. You know, so I want a machine to stay in touch with people for me. But the truth is, you know, if you want a machine to stay in touch with the people for you, then they might as well go to an app. They might as well be in the cloud with somebody else. They've got better machines, better apps, better technology, right? So we need to win on the ground, and that's with just making sure that we're engaged with these people. And the first point would be the next slide, Tom, is definitely, you know, making sure that we immediately schedule that refinance appointment. You know, that's the first thing. I mean, it's like at the loan application, at the desk, we're signing papers or however it's working, or, you know, on the screen share or whatever. We're telling them, I'm going to call you on this day. You might want to put it in your calendar because I'm putting it in mine. You know, I'm going to call you on this day. to schedule this refinance opportunity, for
Hey
you.
Frank, why don't you put it on the borrower's calendar and yours together?
Yeah.
Meeting. Hey,
Set the
this is when we're
appointment.
gonna,
Yeah.
set it up.
Yeah. You could do that in Google so easily. You set the appointment. It says invite somebody. You put his email in right now. You push it. He gets it. He accepts it. Says yes. It's in his calendar. It's in your calendar. You can literally do it in a couple of seconds. It's not that big of a deal. But then on your end, what you're going to do is Tom, if you can bring up the next one, is just scheduling. Schedule the quarterly calls with these people. So if you're doing two or three I almost said subprime. Forgive me, Tom. If you're doing two or three non-QM deals a month, right? And we'll show you how to go find them. And this is completely within the realm of reality today to get done, right? If you're getting two or three of these deals a month, right? Well, these are the ones that you're definitely going to want to do a quarterly follow-up with these guys. So if you're doing two or three quarterly follow-ups, a month on people, I mean, that's not that much work on your end. It's not that much involvement, but it's really, really important involvement. And you want to have, a really quick phone call with these guys on a quarterly basis. And then, of course, Tom, the next question is, or the next slide is, what am I going to talk about, right? Here's the truth, man. It doesn't matter what you talk about. It just doesn't matter. Just call. Just show up. Wasn't it Woody Allen who said 80% of the battle of winning life is just showing up?
Showing up.
Yep. He said just showing up, of being successful. 80% of the battle of being successful is just showing up. This is just showing up. Brian always says, Brian, sometimes he gets real gym happy, where he goes to the gym and he's getting all in shape and all this stuff. And he says, I never have a plan. My only plan is I just show up. Okay. So he goes, when I show up, I do something, and things happen. It's the same with these calls, guy. You don't necessarily have to have some sort of thing that you talk about, because a lot of times when we don't think we have something to talk about, that hinders us from making the call. Don't worry about it. You just call and say, hey, how's it going? Just checking in. Just have some small talk. And then you're just going to remind them, don't forget, we're just going to, I'll call you in 8 months. We're going to do that refi. We're going to make sure we get that out of the way. And they go, great, man. Appreciate that. Thanks. But then here's the other secret little sauce here, right? When you've got a guy that you're working with like this, who's appreciative of you, who's glad that you've done for him. He's happy that you're staying in touch because he wants to take care of this business down the road, as well as you do, right? Ask for the referral. I mean, we just don't ask for the business enough in this industry anymore. It's lost on us. We're just not saying, hey, I'm trying to help as many people as I can right now. Well, it's just like this, guys. Hey, before I hang up the phone, in fact, it's the next slide. Let's do the next slide. I have the script. This is your script. Before you just have your small talk. Yeah, it's just, hey, before I let you go, I'm just trying to help out as many people as I can right now. So with that in mind, is there anybody that I can talk to who might need my help? Oh, and by the way, there's a lot of down payment assistance available out there for any first-time home buyers. And that you just want to throw that at them. So if you're having this conversation once a quarter with them, hi, small talk, reminding them, yeah, we'll do this thing in 6 months now. We're looking forward. Hey, before I let you go, I'm trying to help as many people as I can right now. With that in mind, any pre-qual or trying to help as many people as I can right now. With that in mind, anybody else that I could talk to right now? I mean, that's basically what we're trying, internalize that on your own. But basically, what's the point I'm trying to make? The point I'm trying to make is ask, right? Because you would be surprised at how many people, if you just ask, are going to be able to provide, a referral for you. And these are the perfect people to ask, because you're like, I always say this, Tom, the best time to ask for business from consumers is when they're in an active transaction with you, right? Because they're thinking all things real estate. They're talking to people. It's on their mind. It's the best time to ask is through the transaction. We should ask for referral multiple times if we can. Well, the neat thing about this strategy and using non-QM is you're basically creating a 2-year long transaction, right? It's your initial deal that you get done, but then there's that two-year rollout deal, right? So that 2-year process, it's kind of like it's an active deal for 2 years. And if you're dropping in on a quarterly basis, having some small talk and just reminding, ask them for a referral through that process, you're going to pull a deal or two out of that. I mean, what's your thoughts, Tom?
Well, I think two things. One is I've talked to a lot of people, just salespeople in general, and a lot of successful salespeople, they use what's called block time, where they just dedicate every Tuesday morning from 10 to 12 to do this, to follow up with prior clients. And because if you kind of have it random, like, oh, I need to call these 3 prior clients on Monday and this one on Thursday, but if you block out time on your calendar each and every week to do this, I think that you'll really start to see dividends. And you're exactly right, Frank. I do think this is a kind of a lost art, that we don't ask for the business and ask for the referrals. Who better to give you referrals than somebody that you helped out? And they're almost, they're always willing. I would even say extend that to realtors that were involved in your transactions. Ask them, hey, you got anybody else? I did this on this non-QM loan, and it's kind of a new product in the market. You know of anybody else that I might be able to help? There's people out there that need these loans, and you just need to find ways to get to them. And this is the best way, is to simply ask, as you said.
Yeah. It comes down to the next slide. It just comes down to engagement, guys. This is rethinking everything, right? I mean, today everybody's got the little e in front of everything that they try to do, and there's nothing wrong with using technology. I'm a big fan of technology, but I think we need to use it in conjunction with old school, engagement. Guys, you saw the script up here. You saw some thoughts. We're about to show you some other stuff. Just as a reminder, at the end of this webinar, we're going to have a survey. Just answer the survey if you can, and we'll make sure you get this actual PowerPoint presentation where you're going to have the scripts available and everything available to you. So remember to do that at the end.
Well, and that's a big piece of it too, Frank. If you're not comfortable, or to me, I don't know how it doesn't matter how good of a kind of fly by the seat of your pants talker you are. Have a little script already written up. It can be 2 sentences, but just to make sure that you get out what you want. The asking for a referral. I love the script that you have, that we have in this presentation, because you can take that and just copy it verbatim, personalize a little bit, and then you're good. And
you're
use
good.
Script regularly.
Yeah. Yep. Use it all the time.
Yep. All right. Awesome.
Yeah.
Okay. So this is a question that we get all the time. Where are these borrowers? If you have not originated a non-QM loan, these are the questions that we get. And I think that's, an obvious question, but it's a great one, because that needs to be part of your strategy. You got to find them first, and then have your exit strategy and your strategy to kind of build your pipeline for residual income. But let's go back a little bit. Let's go to finding these borrowers first. And where do you go? Obviously, the first place, where you go to Realtors. We do, in fact, we encourage all of our customers to go make realtor presentations. In fact, Frank, you've probably heard me say this before, we'll go with you. We'll help you make these realtor presentations. We can be the resident expert, so you don't have to know all the ins and outs about non-QM. We could do the whole presentation for you if you'd like, or we can just be there as a resource for you. But what's really interesting is, because one of the bigger non-QM loans in today's market are the bank statement loans for self-employed borrowers. But when realtors hear about that, guess who's the most interested in this?
They are.
The realtors for themselves.
I need a loan.
Oh, wait a second. I can qualify on bank statements and not tax returns. So, it really is something that you should be very excited about, and take this to realtors, and don't think you're too late. This non-QM and the awareness is still very low. So get excited and take this to realtors, and you'll see their reaction, because obviously they want to grow their businesses and they want to capture as many potential home buyers as possible. And by using non-QM products, you can show them how to do that. So yeah. This other one, the other LOs, you want to talk about that, Frank? I know.
Yeah, that's one of my favorite ones. So this is a great one, man. So believe it or not, other loan officers can give you non-QM business in your area. And what we're talking about here, guys, is your local banks, credit unions, these types of things, these types of organizations that darn well they don't do non-QM. They're never going to do a lot of them don't even do government loans. They don't even do FHA. They're just agency deals. No jumbo, no nothing. It's just Fannie Freddie stuff. That's what they do. Local credit unions, small banks, these types of things. Even some of the larger banks don't even do non-QM. So right here where I'm sitting right now, I could literally walk to 3 banks, like within 30, 40 seconds, I'd be at 3 different small banks in my area and credit unions that I know for a fact they have loan officers that do home mortgages, but I know for a fact they are not doing non-QM. They don't do non-QM at all. So this is the kind of situation where you can walk into these banks, meet these loan officers, let them know, I'm not here to try and mess with anything you got going on. I'm just letting you know I can help in these scenarios. If you happen to have a customer that doesn't fit you guys, I'm here to help if that makes sense. If that makes sense to you, because like you said, Tom, before, these bank mortgage guys, they just want to be able to help the borrower. They don't, they don't like. It's no fun to just say no and good luck. It's better to say I can't do it, but I know somebody who can. This guy could probably help you out. And you'll get business out of them. You'll get business out of them.
And I would also say the big banks, especially the Wells, the B of A, those loan officers, they want to do that. They want to take care of their referral partner or whatever. So if it falls outside of what they can offer, they would love to have a resource. So why don't you become that resource for them? So obviously builders and developers, same kind of thing. Anytime a builder, especially, they have a model home, anybody that walks into that model home, they want to be able to have a program for that borrower to buy a house. So non-QM just helps them expand that offering through you. So good opportunities. I mentioned the bank statement loan. So who's very aware of the borrowers that can't qualify for a traditional agency loan with their tax returns? It's the accountants that are doing their taxes. But
because they're awesome.
But they're doing their job, right? That's what they're supposed to do. But they know who has the good cash flow, who has significant assets, who more than likely has the good credit to go along with it. So those are great resources. Accountants and financial planners take these products because they know the borrowers who have been locked out. Because as a potential borrower, I'm going to share that with my accountant. Like, I'd really like to buy a house, but I've been told by an originator last year that I couldn't qualify. Well, the accountant shows them, well, I can stop writing off all this and show you making a lot more income, but you'll have to pay a lot more in taxes. And we know where that conversation is going to end up. The potential is say, no, I'm good. You keep doing your job. But those accountants would love to help out their clients. So
there's a great way to get to those guys too, Tom. Of course, in your local area, I still believe in engagement, right? Like face to face, on the phone. That's a great way to. But in all honesty, you could actually. Oops, what's going on here? You could actually reach out to accountant CPAs in a pretty broad. If you drew like a 50-mile radius around your city, right, and you could see all the surrounding cities and areas, all the CPAs and accountants out there. What you could do is Tom's going to show you how you can actually get marketing material, branded to you. So you can get a flyer for the self-employed loan, for the bank statement loan, right? Attach your business card, a little handwritten note, and literally snail mail these people, because snail mail is so outdated. It's back in.
It's
what I mean? Because nobody does it anymore. So you're like, it's like, hey, what is this? And it's a personal thing from you to say, hey, I offer these. If you have any questions, let me know. Here's my card. I can help your people out. And that's the kind of thing where I'm telling you, a CPA or an accountant, when they got that, to go, and they'd pin that up in the cube, or they'd pin that flyer up. It'd be in their hands. Like, I'll remember this guy in case I need him, for the farther ones that are outside of your area. And if you once a month sent those guys, you built a little database on CPAs, and once a month you sent them a flyer with your card and a little note. You know what I mean? Oh my God, I'm telling you, you would pull business out of that, no problem.
Frank, that's the engagement. That's the ground game. That is the differentiator between the e businesses out there. So be that person that's doing it differently. So,
we wanted to run a quick poll too. Let me just run this poll real fast. Out of those sources to get some new non-QM business, we're curious which one of those do you think would be the that you'd be most likely to go ahead and try and find, or try and pull some business out of. So if you guys got that poll up, go ahead and start picking on, start clicking on what you think would be your favorite thing, or the thing that you would want to try the most. Wow, this one's flying, Tom. This is great. Oh, the numbers are coming in furiously. It's doing great.
I think I can guess a winner.
All right, we're at 51% of the people that have voted, 55%, 57%. We'll let it roll here. Go ahead, guys. Take the poll. We're up to 63% of the people have done the poll, 65, 67. Let's let it roll. I'm very curious to see where the number one is. I'm up to 71, 73. They're still voting, so let's let it roll, Tom. What do you say?
Okay, yeah.
I want to see it roll in. Okay, we're at 76. It seems to have stopped here at 76%. So, I'm going to close it, and I'm going to share the results with everybody. So number one, Tom, what do you think it is? Do you see this?
I don't see it.
Okay, good. So what do you think it is?
I'm going to guess Realtors.
It is. Guess what number two is?
Other LOs.
You're right. You're very smart. You can see this.
The third one's accountants.
Yes. Keep going. You're on a roll.
Probably builders.
Yep. You nailed it. Dude.
I really can't see it too. That's just.
You nailed it perfectly.
That's a gut.
And it makes sense. It makes sense. So,
absolutely. Well, again, I really can't underemphasize realtor presentations because not many originators do that anymore. Realtors, they're just not used to, and the reason is post-crisis, what have you as an originator had to talk about? I do agency and government loans, and
right.
My service is good, and
I close fast.
Yeah, I mean, and that's very good to share that, but it's just probably not anything unique. So when loan officers have, go to branch managers of real estate agents and offices, they love to, they need content. So they're happy that you're calling and saying, I've got something new to talk about in the lending world called non-QM. I'd love to educate your realtors. Shoot, they'll invite you and let you come take the floor.
They're always like you said, they're always looking for something. These sales managers. I mean, it's like they need content. Just like you said. Yeah.
Right. Yep. So, yeah. All right. Well, cool. Well, let's. That poll was good. I'm glad I was able to guess the results. But I do think just scenarios is always important. We get those questions a lot when we do these prank, people asking about different loan types, but these are just some things that I'd like for somebody to see. So we have and these are real loans. These are loans that have closed with Angel Oak. We had the president of a casino in New Jersey wanted to move to the Southeast, but during the crisis had a vacation home, a beach house that was underwater, and they finally had to give it up. It was a short sale. This was June of 15, but as they're moving south, wanted to buy $1 million home, had 710 credit scores, but good income, but they had that short sale. And this was this was 2017, early part of 2017. So their short sale wasn't even 2 years old. So getting an agency loan, getting a prime jumbo loan, forget about it, right? That's not going to happen. So we put that borrower in a 90% loan with no MI, and they were able to get that house right out of a year and a half after their short sale. So that was a perfect scenario for the originator to set up the quarterly follow-ups like we just talked about, and then looking at the calendar when the short sale was, there are these major milestones, but 2 years is kind of a big cutoff, but then 4 years really opens up the door to a lot more products and programs. So this person who closed in January 2017, looking 2 years down the road, you set the calendar reminder, you set it up with the borrower that, hey, when we hit March of 2019, you're going to be ready to refinance this loan into a more agency or jumbo prime jumbo loan. So that's what happened. So in May of 2019, come back, refinance it in a conforming jumbo that was probably in our platinum loan, because prime jumbo requires generally 7 years seasoning, but at 4 years, the products even through Angel Oak get a lot better. So that's really how this whole thing works. This was a perfect scenario of somebody who'd had a credit event that they had seasoned. Without non-QM and without Angel Oak, this borrower would have never bought the home. So originator, they got the purchase, and then coming up this spring, they're going to get the refinance.
Yeah, this is the perfect scenario.
Yeah.
And it happens all the time. I mean, this is real, happening all the time.
These are real deals. So here's another one. Doctor moving across the country, had a short sale again. 716 FICO, good salary, 90% jumbo, similar kind of deal. Closed in July. Quarterly follow-ups, called them a year later to refinance, and then able to move them. I mentioned our platinum program. That kind of requires the 4 years, the 4-year seasoning from their bankruptcy or short sale. And so this was 4 years. And this actually came from that loan officer that I talked about, whose business was up 30% last year, because he was doing a very good job of setting up the refinance right out of the gate, building his portfolio for
So smart.
road.
So smart. Yeah.
Pretty simple.
Really, really smart.
Another one, borrower 679 FICO. You know that 680 FICO for jumbo loans. This was a 828 purchase, but you have to have a 680 in almost every jumbo product, prime jumbo product. That borrower had a 679, so they couldn't get it. So we put them on an 80% loan. They closed in November. This one happened to be a high-rise condo. Really, what they needed was one more point on their FICO. So what would get them that point? A good mortgage pay history, right? So they got the mortgage, prepped them ahead of time, make sure you make all your mortgage payments on time, and then refinance them this past December. So again, it's the strategy. It's putting together the strategy at the front end is going to help you continue to build that pipeline of refinances.
You know what I'm seeing here too, and every time we do this, it's just obvious that jumbo is a real sweet spot for Angel Oak, because the traditional jumbo products are pretty tight, in their guidelines, et cetera. And so there's a lot of fallout in your typical jumbo, considered the A paper jumbo products. And so you guys are there to really pick up the pieces on a lot of that, aren't you?
Well, yeah, our Platinum Portfolio Select average loan amounts, Platinum is over 550,000 nationwide. So it's absolutely a jumbo product. We go up to $2.5, $3 million loan amounts. So we see a ton of that. And just like you said, the traditional prime jumbo type loan guidelines, they're very, very tight with zero flexibilities, just like the agency loans. So yeah, we see a lot of the big loans. And I mentioned the bank statement loans. Those are large loan amounts. These are self-employed borrowers that have good cash flow, have good cash in the bank. They don't necessarily want the highest LTV, but they want large loans. And getting a prime jumbo loan for a self-employed borrower, anybody on the call who's tried to do that is probably aware of how difficult that can be.
Yeah, it is. Yeah.
So, all right, let's change gears here a little bit. I'd like to sorry, I just messed that up. I wanted to just kind of move off the PowerPoint and go to our website. I talked about having resources for you. So if you're on this call, if you take away anything, just take away our website. It's right here, angeloakms.com. But that is where you can find lots and lots of resources to help you learn more about non-QM, get signed up with us, get hooked up with an account executive, and then we'll walk you through the process. But really, first and foremost, right here on our website it's Quick Quote. Our Quick Quote gets the most traffic of anything on our website, and the reason is it's quick, and you can find out very quickly whether or not you have a deal. So you go to our website, you click on Quick Quote, it'll take you right here. You actually have to put in your company name, but you don't have to be approved with us. That's just kind of doing a check of whether or not you are, so we can get pricing right and those kind of things. But so this is what you do, Frank. Go in. Sorry, I've got to look down here, but you answer a few questions. So let's just say credit score, loan amount. We talked about the jumbo, so let's say it's 750 to $1 million. We're going to look at a lower LTV. On this one's 70%, and they've got a good pay history, 0 times 30. So as soon as you answer those 4 questions, options start popping up at the bottom. So right here, our platinum product, I mentioned that already. We asked for a 70. We can do up to a 95 for this borrower without MI. Just remember, anything over 80 in non-QM with Angel Oak is not going to come with mortgage insurance. But you have the rate listed right here. And you can just change it. You can change any scenario. You can change the loan amount. You can say, hey, you know what? What about this borrower is self-employed? I need a bank statement loan. So boom, you change it, and everything just it switches for you on the fly. Now,
nice.
I'll tell you, to take this rate and go right to the borrower and say, I've got a pre-approval, but you can at least have an intelligent consultation with the borrower about, hey, it looks like we might have some options. Let's go ahead and finish, get some paperwork in, start the process of the loan. And right from here, Frank, it's very simple. You click pre-qual request, and that takes you to the next page where you just select your account executive, and the process begins. You fill out a little bit of information, upload credit report 1003. That'll go directly to your account executive that you selected, and within 24 hours, you'll have something back in writing of the loan parameters, pricing, loan to value, those kind of things. So then you can take that to the borrower and get the loan started with Angel Oak. So it's pretty simple. It's
really, really simple. It's great. That's one of the great things about you guys is that quick quote, man. It's probably, like you said, the hottest thing on the website. Yeah.
Yep.
Go ahead. So what about, how do they tell if they're approved with you, or how do they go about that process, or, you know what I mean?
That's good. So we have our broker package here. If you're not approved with us, you can actually download it right there and start. But this Contact Angel Oak, we have Find an AE. So the easiest way to find out if you're approved, if you don't know, is to contact the AE in your market. But here's a map. Everywhere in green is where you're licensed, or where we are licensed. So you can see it's virtually the entire U.S., couple states still remaining, but you would just click on the state of Georgia, let's say, that's where you are, and it lists your account executives, and then you can just reach out to them directly from here. They would be able to tell you whether or not you're approved, and anything else, come educate you, again, join you in a realtor presentation, whatever it is you need that you can't find on our website, that AE is going to help you with.
What about one of the great things about working with you guys is you make it easy for the originators to grab some marketing material, like we talked about, like mailing those CPAs a flyer, or going out in the field to realtors. How does that all work?
So the first step is just getting approved with us. If your company's already approved with us, then you're good. We have a little form you have to fill out so you can get access to everything on our website, including our portal where you would upload loans and those kind of things. But right here, it says log in, and you'd get a unique username and create your own password. But that's going to take you to this website right here. And this is where you would log in. But I'll just show you a little demo here. You would log in. If you have loans in the pipeline, all your loans are going to be right here. But marketing portal is where we would send you. Right here, marketing portal, go to flyers, and every flyer that you can imagine is in here. You can see we have many of them. They're not, in fact, you mentioned the bank statement one, so I'll just pull that up. These are not customized. They say nothing about Angel Oak. They say, well, okay, I pulled up the wrong one. But this logo is not.
Normally, they don't say anything.
So, but this is where you would just put in your information, put your logo down at the bottom, put in your name, your contact information.
Yeah.
You can print them, email them, post them online. So just that's really the process, and it's really simple.
Yeah.
Beyond flyers, we have all kinds of other things too. Video.
Yeah.
Those that like to do social media, you can put all kinds of things out on Facebook or LinkedIn. We have these little 1-minute videos that our active customers, they love them because it gains interest. It's something that somebody's interested in watching, and they are showing themselves as the expert.
So it's a little marketing suite, if you will. Yeah, which is nice, and an effective one too, because you've got the Rethink Everything, boots to the ground marketing materials, which is really what's going to get you your business right now. Plus, you've got the stuff you can share on social media, et cetera, which is nice.
Yep.
Really, really great.
Absolutely.
Yeah.
So
cool.
That's kind of it. Again, our website, that's the biggest one, angeloakms.com, and all these resources, quick quote, pre-qual request. We're about to roll out some new tools to even give you quicker answers and pre-approvals and things like that. So always updating this website to make it a useful tool.
Awesome. Well, there's a few questions, if we can field those real quick.
Oh yeah, sure, absolutely.
So Jeanette's asking, hey, I want to get that script. It's not a problem. You'll get the script, Jeanette. All you got to do is at the end of the webinar, complete the survey question, and you'll get the script and the recorded webinar sent to you at that time.
Yep.
Doug is asking, hey, on your products, are there prepayment penalties?
Non-QM loans for any owner-occupied and second homes, there are no prepayment penalties. The only products that do have a prepayment penalty are non-owner. We have some specialty investment loans. Those contain a prepayment penalty, but those can be bought out either with some discount points or a little higher rate to get rid of the prepayment penalty. So, but majority of what we do does not contain a prepayment penalty.
Okay, there's a couple of guys are putting some little quick scenarios we could run. Maybe you could go back to quick quote and we can
sure.
A couple of, I'm just trying to see if they've got enough information in here.
Okay.
So here's one. Let's see if we can get this in. A loan officer's got a borrower in the questions here. He says that they want to close on a $1.1 million home. They were turned down by 2 other lenders due to a short sale less than 2 years ago.
Okay.
FICO 683 and looks like 70 LTV.
Okay, 70, got that.
Yeah.
Did they say anything about income type? It was probably full doc.
Let's say full doc. There's not saying they have any.
And then it was what? It was less than 2 years?
Less than 2 years.
Okay. All right. So right there. So we have
do it.
Non-prime product. We asked for a 75. They need an 80, or we could do up to an 85. Or actually, we asked for a 70. Well, that was a.
Well, yeah. This guy's
Yeah.
He's 70 is fine for him. So.
Yep. So 70%. There's the rate, the borrower paid rate, and if that's something, again, there's that little spread, but that's a perfect scenario. We've already shown a couple where you can get them in this loan, get them in the house, get them at today's values, and then a couple of years down the road, when they've seasoned from that foreclosure, then you can refinance them into an agency loan.
Okay. Okay. We got a couple others. There's one more scenario here. Let's get this scenario, and then we'll ask. There's just a couple little questions there, and I think we're good here. So this person saying that they've got a guy who had a score drop to a 614, and the loan amount was $475,000.
Okay.
Looks like 80 LTV. Not saying anything about income, so let's assume full doc on this. Yeah, he's saying full doc.
Full doc. Okay.
Yeah.
So here are the options, because once you get below a 620, wow, the products available drop tremendously. I mean, we've heard lots of stories of different reasons why a credit score would drop, but once it's below that 620, there's really nothing you can do other than try to fix their credit. But credit repair, we know that can take forever, and at that point the borrower may have lost interest in even buying the house. So you want to get them in a house now. Here are some options. And did you say an 80%, I think, Frank?
Yeah.
Yeah, so here's a couple, and it's just some differences are some bankruptcy seasoning, but our portfolio select, we could do up to an 85 borrower even with the 617 score. So we've got that loan. That's what we do all day, every day.
Awesome. Well, that's pretty much it. There's just a couple little straggler questions. We'll let the AEs handle those. Sorry, couldn't get to those right away, guys. We have to move on. We've got another webinar coming up that we have to prepare for. So I've got to sign off of this one. But always a pleasure, Tom. Great stuff as usual. And for those on the call, don't forget, do the survey and you'll get the scripts and everything, the PowerPoints, the whole schmeal. We'd appreciate that. And thanks for tuning in, and look forward to seeing you guys maybe again soon on another,
awesome,
riveting Angel Oak National Real Estate Post.
Thank you, Frank. Thanks everybody for attending.
Thanks, Tom.
All right, take care. See you.